All right, welcome again today. This is John Mazzara, Remax Results, Minnesota. And with me again is Danny Fluke with Kind Lending. For you investors out there, hold on to your seat. This is going to blow you away. Danny is going to share how you can build your portfolio, and you don't have to do it through, I mean, you can use hard money and everything to initially purchase, but Danny's going to share how you can maybe avoid that and how you can utilize something that I've never heard of. I know it's going to be a hit. The word just needs to get out. And with no further ado, I'm going to let Danny take it away. Danny, tell us what you got today.
Hey, thanks, John. So this is what the terminology in the industry is: DSCR, right? Debt service credit ratio. I like to call it cash flow, right? Because that's what it is, right? So basically, I don't need any of your income. I'm not going to look at your tax returns. I don't want any check stubs. I don't need 1099s. I don't need anything personal from you for your income. The approval is based on the cash flow of the property you want to buy, right? That's it. That's what the approval is based on, right? So obviously, the higher the cash flow, the better the terms, right? But where we're different, because there's a lot of companies that are out there that are trying to jump into this cash flow approval process, right? And offer these programs, right? And I'll tell you, we have specific items that we offer the property investor that nobody else offers, right? So the big one, the main advantage, John, that your clients have working with us, or that someone seeing this video would have contacting me, is that we offer approvals even on negative cash flow, right? So why would someone put 20% down on a property that was losing money every month, right? And the answer is pretty simple, right? It's either an up and coming area. So an example of that is, 3 years ago, we were doing these loans in Vegas where the new stadium was going in, and people were buying $300,000 and $400,000 condos that were only renting for $1,200 to $1,300 a month, right? Negative cash flow. Guess what those condos are worth now? 2 commas, over $1 million.
Wow.
And they're getting $8,000 to $9,000 a month in Airbnb rent because the stadium is finished. It's a full concert venue, a full convention venue, and that was an up and coming area, right? So that's why we'll look at a deal that has negative cash flow. Another example is, the market was so tight for a long time that investors, you couldn't find a 3-bedroom, 2-bath house. You were competing with 10 people that wanted to live there, right? So investors were dropping down into that 2-bedroom, 1-bath place that was, 700 square feet because nobody wanted to buy it because it was 700 square feet. And their plan was, well, I'm going to buy this and then I'm going to put 80 grand into it and put a master suite on the end. And now I got myself a 3-bedroom, 2-bath with a great new master suite, right? So they're going to get more rent for it. So yeah, when the deal closed originally, it didn't cash flow, but now that they put the extra capital into it, now it's $1,000 a month positive, right? So those are the kind of the 2 main ways that we can look at a property and use common sense and say, yes, we'll give you an approval even if it has negative cash flow. So it's a huge advantage in this market, right? Any questions on that, John?
Yeah, you had mentioned the Airbnb, so that's really kind of an interesting angle. So somebody, let's say they wanted to buy a duplex and get $1,500 a month cash flow, but if they did an Airbnb, they could get $3,500 a month cash flow, but they don't own it yet, so they don't have the 3,500 yet, but they know it's, like you said, right by the stadium or right by the college, or
on
right
the coast.
Yep.
Yeah, we see it all the time. So there's a couple caveats to that, right? To get credit for that Airbnb rent, the unit has to already be in that Airbnb. There's all these different, we use Airbnb as like the generic term, like Scotch tape, right? But all these different short-term rental programs.
Okay.
You would have to have 12 months documentation to use that higher rent. Otherwise, we default to the area 12-month rent, But again, that's why we allow you to go negative, because if you can show us the comps, right? And we'll work with the realtor, we'll work with the property buyer. And if we can establish, hey, you know what? Yeah, it looks like it's going to be $4,000 a month. Corpus Christi, we just did this, right? With the 12-month lease, it didn't cash flow. But we said, hey, you know what? On an Airbnb, this thing is going to cash flow like crazy. And we said, yeah, we'll do the deal, right?
Cool.
So great question. Yeah, the Airbnb is very popular.
Wow. And what kind of a loan to value are we looking at on these? The min max type of thing?
Yeah, the minimum down payment's 20%
Okay.
going into it. Yeah, there's 20%. And then beyond that, a few things that we offer besides the negative cash flow is we offer kind of a unique program. It's a 40-year fixed. And for the first 10 years, you have an interest-only option, right? So that maximizes the cash flow. And it's the cheapest, lowest payment to carry the property.
Totally. I love that. I used to do that when I was buying condos for short-term holds. I would buy them with arms, interest-only arms, so you could, again, not have the rent where it needed to be to, we cover the payment because the payment was so low because it was interest-only.
Exactly.
Yep.
And the great thing about these is that it's not even an arm. It's literally a 40-year fix. So let's say somebody got approved at 7%, 7.5%, right? It's a 7.5% interest only for the first 10 years. At the end of that 10-year period, whatever the balance is, if they paid the principal down or not, right? Whatever the balance is, it automatically converts to a 30-year fix at the same rate. There's no additional qualification. There's no additional approvals required. It's it automatically flips over into that 30-year fixed.
Boy, that is a beautiful thing. I know during the last recession, all of the investors, when their properties went down and their notes were called because they were on short-term 5 and 10-year financing, and the banks weren't funding, they got in trouble, if you know what I mean.
Oh, absolutely.
Yeah, that's fantastic that they have that safety net going into something like this. That's
and if someone selects that 40-year interest only option, that's the payment we're going to use to calculate the cash flow. It doesn't default to a 30-year fixed or a 20-year fixed. In some cases, I see that a lot on different deals that we're competing for.
Sure.
We determine the cash flow by the actual payment that you're going to pay. So if the 40-year interest only, if that box is checked and that's the one that you want, then that's the payment we're going to use to determine your cash flow.
Well, that would make a lot of properties work that maybe otherwise wouldn't. That's just incredible. And this is a no documentation other than the property. This is a no documentation program. So
literally all we need is your credit score, your down payment, and the appraisal, because the appraisal is going to tell us the value of the property, and that's going to give us the rent survey. That's it. That's all we need. And this is a great thing for people that are either just getting into, maybe it's their first or second investment property, but it's also very attractive for people that already have an investment portfolio. Because you can imagine if you had 12 properties and 8 of them were financed, if you went to the local bank to get a loan for another investment property, you literally have to document every property that you own. They want the CC&Rs.
Yeah.
They want the condo specs, right? They want the HOA budget. They want insurance, the leases, the proof the leases are being collected on. I mean, every piece of documentation times 12 if you have 12 properties. They're gonna, and if we talked about the scenario before, you get approved now, and then you go into escrow next month, and then you close the following month. Guess what? That whole portfolio package has to be updated 3 times before you get to the closing table. You know what we say? You know what we say?
None of that.
Anything on your credit report, all I need is the address to link it. That's it. I don't want to see anything.
Wow. So can you do non-warrantable condos on this?
We can. It's a very unique product though. And here's why I say that, right? Because we don't do all non-warrantable condos, right?
Okay.
And this is true on any one of the 5 programs, the no tax return programs.
Sure.
Any one of the 5, you can do non-warrantable condos. However, it has to be for a non-construction or building related issue, right?
Okay.
So here's an example. I'll give you an example of what we don't do, and then I'll give you an example of what we have done, right?
Okay.
So if there's a problem with the fireplaces and they're not venting correctly, and they've got to go through and fix all the vents, that's a non-warrantable that we cannot lend on.
Okay.
It's a construction or it's a building issue, right? Railings being replaced on balconies, can't touch it. Electrical that has to be replaced, can't touch it. Stucco falling off the building, can't touch it, right? What we can do are items where typically a non-warrantable condo is a lawsuit. And if someone is suing the HOA or they're suing the common ground, so you have a slip and fall in the garage, right? You have a worker that's fighting workman's comp to get a workman's comp claim done, right? Those items like that are not construction and not building oriented, yeah, we can take a look at those and get those done.
Okay, cool. And the property has to be, I mean, it can't be like a fix and flip, really. I mean, it has to be in livable condition and decent condition. It can't, correct?
Yeah, it can't have like, there's no kitchen, you know, it can't be a flip project that you walked into
Okay.
where they already demoed half the house. No, it doesn't work. We can't help with those situations, right?
Okay,
It has to be what they call habitable, right?
perfect. I think I know the answer to this, but I think I'll just ask it. What if the seller is willing to do a carryback of, let's say, 20%, and then you finance the 80? So effectively it's 100. So the borrower doesn't have anything into it. Is that even a possibility or not?
No.
Okay.
No, we want, this is, and again, this is really this product. We don't see a lot of minimum down payments because here's what happens, right? So we get the approval for the borrower, right? They find a property. You help negotiate a great deal, right? So they're in escrow now and we get the appraisal going, right? So what happens is it comes back and I'll tell the borrower, hey, listen, we have 3 options, right? You can go with 20% down. Here's the rate, here's the payment, right? It's higher because at 20% down, it doesn't quite cash flow, right? If you put 24% down, now we're break even. And here's the lower rate. And here's a lower payment, right? And then I say, listen, this is where you have 25% positive cash flow. You need, 31% down. And here's the much lower rate. And here's the much lower payment, right?
So risk-based pricing, and yeah.
Exactly. So, we offer the 20% with the negative cash flow. And, some people look at it and they go, yeah, you know what? I think I'm going to get more than that in the rent anyway.
Yeah.
The appraiser thinks it's going to be $1,800 a month, but I know this is going to be $2,200 a month. So I'll take the 20% down, right? And the slightly higher payment. Let's go that route. Right.
Awesome.
But ultimately, the investor is our boss, right? I'm just there to deliver the most aggressive options, no matter which way they want to work the deal.
Okay. And so all you're going to really verify is that they do have the money in the bank account. Do you require like 2 months worth of bank statements or asset statement, or what is the verification that?
So for the down payment, typically I want 2 statements that don't show deposits. That,
Sure.
They can maybe small deposits going in, but I want to see the money in the account when the statement is generated. So I always say, give me 2 statements that doesn't show the money being moved around. And that's pretty much all we need.
Okay, that's outstanding. And then minimum loan size, is that 150 on this one as well?
Affirmative, yes.
Okay.
Yep.
And not that somebody maybe could make the numbers work, but hypothetically speaking, they could go up to $4 million.
On the investment property, it's 3 million is the cap.
Okay.
Yeah.
So maybe out in California.
On the bank statement program and on the P&L only or the 1099, they do allow us to go over 3 million up to 4 million on exception, but on the investment property, it's a hard stop at 3 million.
Okay. Well, we don't have anything like that that investors buy here in Minnesota. The price per unit, nothing is close to that. But and this is good for 1 to 4 units, correct?
Affirmative, yes. And residential.
Okay. So 1 to 4 residential, could be a condo, could be townhouse, could be a house, could be a duplex, triplex, fourplex, any of the above.
Right. Exactly.
Outstanding. Wow, just another crazy product. That's great. And the minimum credit score is going to be a case-by-case basis, but it goes down to as low as something in the low sixes, 620.
On the investment deal, yeah, it can go as low as 620. Obviously, the higher the credit score, the better the terms, and the lower the down payment we can offer.
Yep. Risk-based pricing again. So yeah, that's great. Oh, incredible. And second home, somebody could use it for a second home, or just for where they're actually renting it out like an investment property per se.
It has to be a non-owner occupied. So it's not a second home.
Okay.
If you hypothetically went there to check on it for a week with the kids, you probably wouldn't be in trouble for that, but it's not a second home.
Okay. So
Right.
with the second home, what product, or would all the other 4 products that you have, would they all work then for the second home?
Yeah, in fact, the bank statement product, the P&L only, the 1099, or the next video we're going to do is the asset, right? So the asset utilization, and all of those products can be used for owner occupied, second home, or non-owner. We don't get a lot in the non-owner just because this product is priced almost exactly the same, and it's so much easier for both the borrower and for us.
Right. Wow, well, this is great. I love it. I love it. I would imagine if you could get this on all the MNRIAs, it's called MNRIA, it's the Minnesota RIA, but there's other RIAs across the country, this would fit really well with a lot of people and their clients.
Yeah, absolutely. We actually have, our own retail unit. We actually go through and we have our own notifications set up that when, a 2-unit, 3-unit, 4-unit building goes on the market, we're talking to that realtor about helping them market this to the investors that are out there, to make it as easy as possible for them to double end the deal. John, I want you to get that listing, and let's find that buyer so you get both ends of that transaction.
Exactly. I just sold a duplex here, but I didn't sell it myself. I was the listing.
Well, next time we'll change
Next
that.
time we'll do this. Exactly. All right. Well, beautiful. Well, Danny, thank you again for this. Anything else you want to share about the investment property non-owner occupant loan before we close it up?
No, I mean, to kind of recap everything, it's the easiest, smoothest, lowest documentation mortgage that you're ever going to see. Because again, all we need is the credit report, the asset statement showing the down payment, and then the appraisal is going to give us the value and the rents. That's it. That's all we need to close escrow.
Yeah, and a 40-year interest only for the first 10. That is insane. That is just great. All right. Well, thank you for sharing all that, and I look forward to our next video.
All right.